Welcome to Biztech's CEO Conversation Show. This is a show where we engage industry leaders to share insights into how they run and grow their businesses. Today, our conversation is with Sheyantha Abeykoon, who is the CEO of Boost Holdings. Boost Holdings is the fintech holding arm under Axiata Digital, and it includes Aspirasi, microfinancing and microservice provider, as well as Boost, which is the e-wallet provider. Sheyantha, thank you very much for coming on the show.
Thank you, Brian. Good to be with you.
Now, Sheyantha, can we start by you giving us an overview of Boost Holdings, your structure and the history?
Sure. Okay. So maybe let me go back a few years. I think we started our fintech journey in Axiata probably about 4 to 5 years ago. And the thesis behind getting into fintech was the fact that we saw an opportunity in our markets where there were large segments of the market that were underserved, both on the retail side and on the small business side. Now, coming from a telco heritage, we saw that we had a very strong overlap between a lot of those customers who were underserved and the customers that we served as a telco. So we launched our fintech business probably in 2017, first as a payment business. And in Malaysia, it's quite well known under the brand Boost, right?
Boost, yes.
So we launched our e-wallet business Boost, and that was the origins of the business. Now, the payment business was never an end in itself. It was more a means to an end. So we also launched very quickly a set of other services on top of that. And the most notable one is our digital lending business, which you touched on, Aspirasi, right, which focuses on giving digital loans digitally to those who otherwise wouldn't have access to credit. We also have branched into other areas of fintech like insurtech, and we also have a merchant acquiring business. I think the big thing that, and it's been in the news lately and we've spoken about it publicly, is that in Malaysia, we are transitioning some of our businesses and hoping to apply for the digital banking license that BNM has announced recently. We are also a regional company. We are present in Indonesia as well. So we operate some of these models in Indonesia. And we have aspirations to grow in other markets in South Asia, Southeast Asia, where we have a footprint either through our parent company or sister companies in the Axiata group.
Now, you've brought up a lot of things that we're going to talk about, and I'm going to ask you about during the interview, but let's start with the digital banking license application. Your partner is RHB. Tell us about this partnership and how do you plan to structure this?
Okay, so I think we've been quite public in the structure of the partnership. I think there are two consortium partners, us and RHB. We would own 60% as the majority shareholder. RHB would own 40%. Now, the thinking behind us partnering a bank was we felt it was a marriage that would kind of bring all the complementary assets that are required to make a digital bank successful to bear. So from our perspective, we've built very sizable fintech businesses in Malaysia, servicing primarily underserved segments of the society, right? Either on the consumer side or on the merchant side, right? At the same time, we are not a bank, and we'll be the first to admit that there is a learning curve for anybody getting into a core banking kind of business, right? And RHB is a partner that has a history of working with us. They are quite aligned in terms of what we want to jointly achieve and the opportunity that a digital banking framework affords participants like us. And they obviously have a very strong track record in things like risk and compliance, infrastructure, running core banking operations, areas where we don't quite have the expertise. So I think kind of, bringing both parties together is sort of the best of both worlds, where we have a complementary set of skills, assets, domain knowledge to build a successful digital bank.
Now, also, it does help that you have ultimately, in terms of institutional shareholders, common shareholding. So I'm sure that had a role to play in it as well.
I mean, yes, you're right. There are common shareholders among both our eventual, parent companies and the shareholders of RHB. But to be honest, I think the partnership was structured at an entity-to-entity level. So this was not a shotgun marriage. We had been in discussions for over a year and a half almost before we actually made the announcement public. So we spent a lot of time aligning on key principles, starting from the first principles of how any partnership would operate, to the mechanics of kind of putting something into a construct that would become eventually a JV and a digital bank. So there was a if you like, a long courting period before we actually announced the marriage. The chemistry between the two teams is great. The strategic alignment is there among the leadership. Right, and I think it's something that we spent a lot of time on, and we're actually very excited about it now.
Now, what's the execution strategy going to be in Malaysia? Will it be a time bank in South Africa kind of execution strategy, which is a click and mortar type strategy, or will it be a pure digital bank type strategy, which is like CIMB Philippines?
So, I mean, obviously, I mean, the two examples you've taken, we'll kind of have our own our own imprint on how we go to market, right? I won't get into too much of the details of the operating model because that is part of our license application. But what I can say is that, I mean, what we do today in our fintech businesses can give you an idea of the kind of bank we would run, right? So today, we service either on our payment side or on our lending side a large number of small micro SMEs who are underserved, right? The interaction with them, the onboarding, the servicing is completely end-to-end digital. So there is no complementary offline process around that, right? At the core of what we do, especially on the lending side, it's AI data-driven, right? So those are some of the elements. And in terms of the target segments, I think we've been quite public about this. I think we are looking especially on, when it comes to the lending side, to look at productive lending for underserved sectors, particularly small businesses. Particularly small businesses in Malaysia, where there is a large, if you like, a gap to bridge, where traditional FIs haven't really catered to a lot of the needs.
And also, I think catering to the underserved and unbanked, are you going for the unbanked sector as well?
Yeah, so it's interesting. In a country like Malaysia, I mean, depending on the stats you look at, the unbanked sector is not that significant, but the underbanked sector, what I call the underbanked sector, is quite significant. As an example, I think about 90% of the population, if you take the retail sector, has a bank account, right? But only about 30% have access to credit, right? So while nominally we do have a lot of people and a lot of businesses that are banked, a lot of them don't have access to the full spectrum of financial services that, let's say, a mid-sized corporate would have, right?
Yes.
So that therein lies the opportunity. And as businesses grow, especially post-pandemic, as they try and get more digital, get closer to their customer, the needs for small businesses to have access to a lot more financing products is on the rise, and we've seen that in the businesses we operate today.
And financial inclusion is really very at the heart of this, isn't it? Because essentially the customers that you're going for, traditionally, as you said, they've been underserved by the traditional banks. The only credit they probably have access to were probably money lending options at very high interest rates. So that's going to help them get lower interest rates and therefore help them with their businesses.
Yeah, right. So I think, I mean, having been in digital for a while, I like to, define, the journey of a digital company in 3 dimensions. One is a purpose, the second is a cause, and the last one is a financial objective, right? So, I mean, the purpose here is obviously to build a very successful digital bank, right? But the cause, you're right, is kind of to service those who are less affluent than all of us. And when I say all of us, not just us as individuals, but as corporates, enterprises, and customers. So you're right. From that perspective, inclusion is one of the key pillars. I think it's also something that the regulator has mentioned quite explicitly in the guidelines as well, that the applicants are expected to have a model that serves underserved sectors, right? The fact that we've been doing it actually for 3 to 4 years kind of puts us in a very strong position, because we've actually we have a track record of doing this in Malaysia. So it's not just a pitch on our side; it's actually a reflection of what we've invested in the past. And the digital bank license, I guess, is a natural extension. If and when we do get the license, it's a natural extension of everything that we've built to date.
And what, there's a lot of companies. I understand there could be as many as 30 plus consortiums bidding for the digital banking license. What do you think your probability is in terms of getting a license? That's the first part of the question. Second part is, what's the plan B if you don't get a license?
Okay, great questions. I think the first one, I'm not a speculator, so I wouldn't like to speculate too much. What I will say though is, and probably getting into banking, I shouldn't be a speculator, but what I will say is that I mean, we are quite confident. I mean, I can't really comment on other applicants, but I think we are quite confident on the merits of our case. Right, I think, like I said, it's something that we've built up over the last 1.5 years. It's something that has a foundation on businesses we have built today, and I think you know, the sponsors, if you like, two of Malaysia's largest companies and industry leaders in their respective industries, right? So I think the case for us is quite strong. I think it's something that we have spent a lot of time on. We are quite clear on the business model and the opportunity that is out there. And we are also, I think, in terms of the resources that we have to, you know, make it a success, I think we have checked quite a few of the boxes. So I would say we are quite confident. Having said that, I mean, you know, we will obviously put our best foot forward, and you know, we'll see what happens. What happens if you don't get the license? I mean, look, we've been on this journey for the last 4 to 5 years, like I said, right? So the journey didn't start because we wanted to get a digital bank license 4 to 5 years ago. We didn't even know that there was that kind of a framework would come up, right? So the journey was really about, you know, building successful fintech businesses and serving underserved segments, trying to fill the market gap that was there in these markets, right? And also, you know, growing regionally as well, because we are not just present in Malaysia. I think that would continue as a fintech. I think we've already established a fairly good track record, and we have very strong success stories. So I mean, we would continue on that path.
Okay, I want to ask you about your Aspirasi business, which is, again, as you said, you've been doing this for a number of years. It's not as well known as perhaps Boost is. Boost is very well known from a brand image wise. Aspirasi, to a lesser extent, a microfinancing and microinsurance platform. Could you tell us in terms of how you are regulated to provide those personal loans in insurtech products and so forth?
Sure. Let me introduce Aspirasi business, and I'll come into regulation, right? So I think you're right. The Aspirasi business is a more focused business. So we built Boost as a large consumer brand intentionally, and we have about 9 million registered users, about 250,000 merchant touch points. So it was really, you know, a scale play with Boost, right? Aspirasi was more about focusing on niche areas where we felt that there was a market gap. So we focused mainly on, you know, targeting micro SMEs, servicing micro SMEs for their financing needs originally, right? So it was all about productive lending, and it was all about a very focused play on micro SMEs. Hence, we haven't really focused a lot on the consumer side, right? So it's all been about productive loans where we felt there was a need. And then we've branched off into insurtech as well. So I mean, in the insurance space, we play, I guess, if you like, in the first part of the value chain. We don't play in the underwriting space. The underwriting space is actually done by our partner and part shareholder, Great Eastern. But everything from, you know, distribution to co-creation of products is done by us in partnership with Great Eastern, right, on the insurtech side. So we really own the customer and the product innovation, because we understand customers. We use a lot of analytics. A lot of insurance products also that we brought are kind of first to bear, right? So in terms of the regulation, I mean, it's quite straightforward. I mean, we operate, we have a money lending license for Aspirasi. And we also have an insurance agent's license for our insurtech business in terms of regulation. Been quite progressive in engaging with regulators. So for recently, I mean, KT, which administers the license for money lending, came up with an amendment to the directive that allowed for end-to-end, you know, digital lending, and we played a key role along with other industry participants in kind of educating and working with the regulator to enable that.
Now, let us zoom on to your Indonesian operations. Now, you've basically expanded your footprint in Indonesia. You've got a 68.75% stake in Indonesian entity PT Creative Mobile Adventure, which operates the brand Kimo, right? Am I right? Tell us about this and how that helps you expand your footprint and your overall business itself.
Okay, so I think we've actually been in Indonesia for a while. So we have a version of Boost that is in Indonesia, but it's not as expansive as in Malaysia. We focus on small businesses, small business payments. We've actually been working with partners in Indonesia, and we've built so whatever we did with Aspirasi on the digital lending side, we've actually been doing that in Indonesia as well for about 2.5 years, working with partners. The opportunity came by our way to do this acquisition that gave us directly a license. So where we could kind of do it on our own and have our own license. And we found a like-minded partner who has also an ecosystem of around 120,000 small businesses, retail businesses in Indonesia, right? This partner had, if you like, the customer base and the license. We had the fintech expertise, and we also knew the Indonesian market, having been there for a while. Hence we made the acquisition. The partner is still around as a minority shareholder, right? So it just gives us an opportunity to turbocharge what we've already been doing in Indonesia. Indonesia obviously is also a market with a lot of opportunity. It's a huge market, the largest market in Southeast Asia. We think you need to be quite focused though on your play in Indonesia. So we've been very focused. We've been focusing on things like supply chain financing, servicing small businesses. We have tried to stay away from areas that are crowded because there are a lot of players, a lot of fintechs, vying for the top spot in Indonesia. So we've been focused on, what we are good at. And again, I think the growth rates that we've seen there have been phenomenal over the last 3 to 4 years. So we are quite excited about our prospects there, actually.
Now, one of the key things when you do any sort of lending is knowing your customer. What sort of EKYC do you do in Indonesia and Malaysia, and what are your NPL rates or non-performing loans rates like?
So we have an end-to-end EKYC process. I mean, if I take the lending business, right? The lending business, we have an EKYC process that is end-to-end lending. We will be upgrading that a notch when we get our if and when we get our digital banking license. It doesn't quite meet the standard, but it meets a fair standard, I would say. And it meets all the standards of regulation. I mean, EKYC, credit scoring, fraud management, etc., very important areas for us. So we've spent a lot of time actually perfecting that over the last 2.5 years. Our NPL rates actually in aggregate across both markets is about 2.5%. In Indonesia, it's almost just under 1%, right? So our experience has been very, very good lending to what is traditionally considered a high-risk sector, right? And I mean, we can get into the reasons behind that, but fundamentally, it was also because we did our homework before we got into this space. So we spent a long time, perfecting our models, working out models that would work before we decided to scale up our businesses, right? It helped because we have a history of actually investing in a lot of data science and AI. Even if you take a parent company, Axiata, at one point, we had over 100 data scientists, right? So we had a heritage of actually investing in a lot of this. And before we even scaled up our business in either markets, we were able to, experiment, do a lot of testing, understand the market dynamics, understand what data works, what algorithms work, what are the incentive structures. And I think all that initial homework paid a lot of dividend.
Now, in Indonesia itself, you have a different set of challenges because there is a larger pool of underbanked and unbanked. There is also geographical spread. How do you overcome those challenges in Indonesia?
Yes, I mean, that's true. I mean, Indonesia is probably a country where you want to pick your areas. So pick your areas where you want to serve. What I mean is not just geographically, but also in terms of products, in terms of segments and so forth, right? So we've been quite focused in Indonesia. We've decided to focus on productive loans, focus only on merchant financing, right? Linked to certain sectors that we understand, like obviously telco, FMCG, and so forth. Now, Indonesia being a very large market, even if you filter out those sectors, the opportunity is still huge, right?
Yes.
So we've decided to, if you like, leverage what we know and what we are good at, and stick to that. Geographically, I mean, we operate still a lot in Java, on the West Java side, and a little bit in Sumatra. So we're not widespread, right? In that sense. But there again, the opportunities in Java and Sumatra are also huge, right? But we like to focus really. We like to apply filters and lenses to the customers we serve based on the competencies we have, the products we know how to underwrite, and the customers who we feel that we can understand and have data about. Yeah.
Now, could you give us a size, an indication of the size of business both in Indonesia and in Malaysia?
Okay, so I think what we've disclosed publicly, I think across both markets, and you're talking here about the lending business, is it?
It's the lending business and the overall business itself, your merchants, transactions, etc.
Okay, so let me just give you the statistics that we've disclosed publicly, right? So I think in Malaysia and Boost, we have 9 million registered users. We have about 250,000 touch points. And on the lending side, we've dispersed almost 400 million ringgit across both markets to about 35,000 small businesses, right? The payment business has been around for the last about 4 years. The lending business has been around just for about 2.5 years. We also have about 500,000 registered merchants in Indonesia as well.
Okay, so it's an enormous business, which then brings me to the fact that the point that Great Eastern bought, as I said, over 20%, 21.87% for 70 million. Now that values you basically as a ringgit unicorn at about 1.4 billion ringgit. How is that cash going to be deployed moving forward?
So the cash is really to fund all our future growth plans, right? Primarily focused on both markets, right? So I think there are three primary vectors of growth for us, right? One is what we've already spoken about, the digital bank, right? And the fact that the digital bank is going to be one of the big players that we are going to make. The second is our merchant business. So we feel that our merchant business, which is linked to both what we do on the lending side in Indonesia and the digital bank in Malaysia, we feel there's a strong opportunity to provide merchant services and merchant solutions to small businesses outside core services like lending and insurance, and that's something that we've already started making inroads with in Malaysia. And that creates, if you like, a closed loop ecosystem for us to then cross-sell our financial services. So that's another, that merchant business is something that it's already there hidden inside our payment business, but I think
yes,
we're going to bring it out as a standalone business, and that's something that we are quite excited about because there's strong prospects there, especially post COVID, right? I think most governments also have realized the need to help small businesses digitize and go online, right? So I think, and we've been kind of at the forefront of some of those programs. And the final kind of growth vector for us is Indonesia, like I mentioned, right? So we've seen strong growth. We've just made this acquisition in Indonesia, and I think there's going to be a lot of investment made to build that ecosystem and gain scale in that market as well.
Sheyantha, final questions. Any last final words or thoughts to leave us with?
Well, I think the final thought I would say is that, I think we are very strongly positioned at Boost Holdings. We're very excited about the opportunities that are there in our markets. I think what we're doing on the digital bank is kind of, in many sense, once in a lifetime kind of opportunity to build a digital bank, which we are quite excited about, right? So I think as a team, we are quite focused on delivering the path that we've set ourselves to achieve. Right, and we hope to engage as many partners and stakeholders along the way as possible, because our model, something we didn't touch on properly, is that our model is very much driven on working with a lot of partners, building an ecosystem which is not just inclusive, but also allows other partners to work with us.
Now, Sheyantha, thank you very much for taking the time to be on the show.
Thank you, Brian. Thank you for the time, and appreciate the conversation.
Now, I'm Brian Fernandez, and I've been speaking to Sheyantha Abeykoon, the CEO of Boost Holdings, on Biztech's CEO Conversation Show. This will be on our LinkedIn and Facebook pages, as well as our website, www.biztech.asia. Please like and subscribe our various platforms. Thank you very much for tuning in.